Advisory and wealth management, that's where the money is. That's why a deal like this is happening. If you're not having any commission, you need to find your revenues from somewhere, and you find your revenues by getting more customers. What do you make of this story?
I think that's fair. I'm a customer of both Schwab and TD on the institutional side, and they both do a great job. So this is particularly meaningful to me how this thing shakes out. But the good news is, and I agree with pretty much all of the points that everyone on the desk made today, the good news is this does result in a net win for the advisor using these custody services, as well as the end client. And I don't know that I would term it as a race to the bottom. What's actually really happening, and the reason why E-Trade was not relevant in this discussion, was not going to be acquired, is this is about financial advisor custody services. That's where all the money is. That's where all the flows are going. The retail, like buy and sell stock business, died 20 years ago and no one told them. So, like, this is really all about trillions of dollars that are on the advisor side and providing other services to them. Now, the key to getting rid of commissions, though, Scott, is you have to replace that revenue with something else.
That's right.
And they have. There's a phantom fee in the form of money market funds that are paying less than market rates. And a lot of these wealth management accounts keep a large amount of money in cash. And cash management is a good business if you can do it at scale. So you need to acquire. And that's why it makes sense that you see Schwab doing this, because the bigger you are, the more you can make on cash sweep products. And that is where their real profits are. They're not in buy this stock, sell that stock. That's a zero business for a long time now. Maybe there's a little bit of profit margin in options trading, but straight up equity and ETF trading is not a profit business. Cash management is. And I think Joe hit on that, and I think Pete hit on that. And that's what I really think is happening here.
You have talked about Schwab in the past. You still own it?
I don't own it. I had gotten out on the rebound after the commission-free trading, and I don't think I would buy it back. And that's not to say that I don't think they're making a good move. I do. I'm just in other financials that I think are better positioned. One further point that I think is really important. You know, when you think about what's so great about fintech and all of the, SoFi was mentioned. There are new companies coming up as custodians to advisors that are going to now say, okay, Schwab, Fidelity, Pershing, to a lesser extent SEI, now own this entire RIA custody biz. And maybe they'll be less competitive now that there are fewer of them and they have more market power. So now you have this next generation of custodians coming up, and they will be more aggressive. And this cycle will just continue to play out. So I think, again, the net beneficiaries are the people who use these services and the end clients, and I welcome it.